If you've been trying to grow a small Forex trading account, you already know that it's painfully slow. You wait for the perfect setup with a nice monthly support, nice little Fibonacci of the hourly time frame. You believe that this trade will do well because of nice confluence. You buy this position, it starts going up, and yes, you do make money, but you only make around $10. This setup works, but it banks you not a lot of money. And if you have a look at the previous price action, there was no real entry for the past couple of days. So what do? You're stuck waiting for another trading setup. So because I had this problem myself, I had to change something. We have to make it work. And this one little change made a huge difference. So listen up. This is AUD Swiss franc, one of my signals I sent in my VIP group. Now take a look at this. This is AUD CAD. Very similar price action, yet a different currency pair. Same setup, same timing, same idea. I took both of these trades with our VIP members and managed to bank 160 pips on both of them. This is how I flipped the problem of having not a lot of setups to having double the setups when the time is right to make money. What you do is you trade the pairs that move together. Most traders just take one setup and scared to open yet another few trades when the time is right. And the time is not always right when you're trading. That's the problem. You need a lot of patience to trade well. And when you have a great setup, you shouldn't be second guessing yourself. You should be actually acting and placing those fucking trades, right? That's how I get more from a few quality setups that actually show up. So how do we do it? So this is the website I use, myfxbook/correlations. It's a very good website. I'll link it down in the description below. What it does, it shows you how closely the pairs are moving together live. At the time I sent those trades out, it was 73.1% correlation. Above 70% correlation is what you're looking for. As you can see, as time has passed, the correlation did work out in our favor. 84% and up to 99.1% movement happened at the same time with two different currency pairs. That's one trading setup and two trading opportunities. So now let's break down the AUD CAD and AUD Swiss franc trades I sent to my VIP group. Let's discuss the trading strategy and why I took those trades. Starting with the AUD CAD, I had a nice little monthly pivot point over here which was broken. I knew that likely there's going to be a lot of selling pressure in around this zone. There was a nice 200 moving average over here, 50 over here. That's the death cross just around the corner. So much confluence in one little trading position. On top of that, we had a nice little Fibonacci. If we draw this from here to the bottom over here, as we can see, it's aligning as well. The 0.5 Fibonacci level is typically a nice little point of balance. Typically that's where the market turns around or has a little exhaustion. The exhaustion happened, and as we can see, it dipped towards the downside nicely. Perfect trading opportunity. Now AUD Swiss franc, very similar setup. Everything is trending down. Nice little pivot point at the top, and even though you see that it's broken it hasn't, because if you have a look at the higher time frames, let's say the daily, as you can see, that's how the candlestick actually closed. So there was no break on the daily. Just because it broke out on the 4 hourly, it doesn't matter. You know, the markets lie to you all the time. It's all you know, everything is lied, everything is not what it looks like. That's why trading is hard for a lot of people. And now we just need the Fibonacci. We draw it from top to bottom over here. It's covering the two levels over here of confluence. A nice little pullback over here. After a pullback, what do I say? Push exhaustion. So that was the push, this was the exhaustion. Back to the previous area of sensitivity. What happens? The trend continues towards the downside, follows through with the correlation, and that's how you make double the money, simply by knowing correlations and understanding that there is a trading opportunity here, right? Not always you're gonna have a perfect trading opportunity. That's why when you see something like this happening, you have to take advantage. So instead of you making 10 bucks, at least you can make 20 bucks. And obviously the previous example I showed you is actually the lowest lot size or risk per trade, right? If you use 0.10 lot size, that would have been 100 bucks. So imagine you place two trades, that's $200 in your pocket. But just because I took these two trades doesn't mean that the stop loss is the same. You know, you have to use the average true range because each currency pair moves a certain amount differently, right? So at that time on AUD Swiss franc, my stop loss was 38 pips, and AUD CAD was actually a little bit lower, as we can see, just over here, 25 pips only. So you have to use the average true range indicator to understand how much of a risk you're going to take. But the overall concept remains the same. Same structure, same timing, same confirmation. The only thing that could be different is take profit levels, stop loss levels, and maybe managing your risk a little bit differently, because it is still two different pairs, right? So what else you could have done when the price is shooting down like this? Well, there was a consolidation over here, right? Support and resistance, supply and demand, whatever you want to call it, doesn't matter. Look, it broke out over here. What happened? Push, exhaustion, right? So when that happens, when that push happens, break over here, you want to move your stop loss to entry, right? To secure your profits, maybe even move it somewhere inside the target profit level, somewhere over here, and then wait for that exhaustion. Exhaustion happens to the previous area of sensitivity around this area zone. The previous support level over here, this line, becomes the new resistance line over here. The pullback happens to the resistance. What happens next? Bearish engulfing candlestick, continuing to drop down and making nice profits this way. And the same logic can be applied on AUD Swiss franc. It's just a little bit differently. As you can see, there is no blue candlesticks, or bullish candlesticks better to say, to go towards the upside. So nice little consolidation zone over here, right? Started, broke out over here. There was no pullback, went towards the downside. You would have done, you know, the stop loss thing, the same thing over here. There we go, 160 pips profit, 2 trades, 320 pips, you banked, you're making money in Forex. Simple. Okay, very important now, engage your ears. Please listen, because it's gonna make or break this strategy. Trading just because of correlation, right? Let's say we want to trade Euro US dollar and GBP US dollar, but the correlation is telling me is pretty much 90 to 85%, which is, you know, what I told you. It's above 70%. It's great. Maybe I should place this trade. Well, no, hell no, because Euro US dollar is currently going up, right? There's nice little moving averages over here. The candlesticks are in between. It's likely gonna turn around, maybe retest this top. Who knows? Nobody knows without proper analysis. But if we have a look at GBP US dollar, look what's happening. It's dropping down. It actually broke past all 3 moving averages. That typically means there is a lot of selling pressure. So even if you follow the correlation now and you think that one of the pairs is gonna follow another, it doesn't make sense, because the setup is not clean. So what you want is to trade in the same direction. If, for example, Euro US dollar and GBP USD would be trending towards the upside and looking very similar, that is a great opportunity for you to make money. But if it looks totally different, one is a buy, one is a sell, it's counterintuitive for you to take a trade and, you know, guess whether the market's gonna go up or go down. Nobody really knows. You can't just be guessing and doubling your risk, because potentially you are doubling your risk because you are taking 2 trades. However, it's not, because if you are taking the solid trades that you are waiting patiently to find, trust me, it's gonna double your money, because you're gonna be taking the perfect trading opportunities every single time and doubling on those trading opportunities to actually gain some momentum and build that small trading account. Another mistake, thinking they're always gonna move the same for some odd reason. Let's take a look again. GBP USD going towards the upside, Euro US dollar going towards the upside. Very similar setup. This is where you may wanna take the trade, you know, but you wouldn't, because there's no clear setup. Come on, it's sky high. Where would you even place your stop loss? Doesn't make sense. However, if you're waiting for pullback, look at this. It's dropping down, right? Something is happening over here. However, if we have a look at GBP USD now, it has broken the moving averages. That's not good, right? That is where the problem is. So you want to look out for divergence. If there is a strong, you know, divergence somewhere over here, open up your RSI, tells you there is a divergence, it might, you know, continue dropping down or something. You want to be aware of that. And if it breaks, you know, the moving averages and not broken over here, you don't want to take this trade, because obviously at the moment things have changed in the market and it's doing something else. Trust me, it will take some practice, but it works really well once you understand it. And the last tip I'm gonna give you, don't go overboard, you know, placing 4 to 5 correlation trades. You know, it doesn't make sense. You are over risking your account balance at that point. You know, if you place in 5 trades on different currency pairs, that's not what you want to do. You want to double up. You know, 2 currency pairs is more than enough. I typically trade 1, but if there is a good trading setup and an opportunity, I double down and make 2 of them, because it just increases the momentum, how fast you can grow your account balance. So yeah, this strategy will definitely help you grow your trading account just by using more from the setups that are already there. Remember, 1 setup, 2 pairs, double the move. Try it out and it will change the way you trade. If you want to learn how to trade like me, I've been trading over 10 years now, have a successful Forex trading group. Link down in the description below to join. And if you need the strategy to build around this, you should watch this video next.